Welcome to Investors Insights. Our topic today is bear market rally ? I'm joined by my distinguished colleagues, Bobby Norman and Ty Miller, who have done some great research as we've continued to look at all the data in relation to the volatility in the markets, your financial blueprint, and also focusing on your portfolios. Before they join me, I just want to say a big thank you to several clients out there that over the past weeks, as COVID has continued to be less of a topic, you've been kind enough to take our blogs and share them with others. And we've received invitations for speaking engagements. And I really appreciate that. You've either with our social media on Twitter, Facebook, LinkedIn, also YouTube. You've been very kind in our podcast to share that. I'm pretty excited getting back with groups of people and doing those speaking engagements. And right now, a big topic is are we in a bear market? Is this a bear market rally? And Bobby and Ty are going to address that today, and I'll be interjecting. We had some interesting comments by one of the governors of the Fed this past week about short-term interest rates going higher. Also looking in the month of July that interest rates could go higher overall, that the Fed could raise rates. And we're watching that very closely. And with that, Bobby, you brought up a great point, something that we've talked about on this vlog. One, in terms of we continue to approach midterm elections and how does midterm election years work? And number two, we've continued to say we feel like that there are some cracks in inflation. Elaborate on that to our clients.
Yeah, so we're close to finishing what's been the worst starts to the year in history. So we're analyzing what could drive the market higher in the second half. And we shared a few weeks ago that historically, the second half of the year has performed well, coming off a bad first start to the year. So we like what history says there. Obviously, no guarantees, but the second half of the year will be heavily dependent on the Federal Reserve's ability to fight inflation without severely impacting the economy. One positive development that we're seeing this week and last week is falling commodity prices. So first, let's take a look at copper here, as you can see in this chart, or what some economists refer to as Dr. Copper, for its ability to forecast the economy. Copper is actually down 13% since June 2nd and is broken below its key support level. And so we're looking at copper very carefully here. Second, let's look at crude oil. As you can see in this chart, after breaking up above $115 a barrel, oil has rolled over sharply in recent days, and it looks like we could continue to see downward pressure heading into the July 4th travel holiday. And then last, let's look at wheat prices. We all know food prices have been up. Wheat prices, which have closely been watched during the Ukraine-Russia crisis since it started, wheat prices were already up 70% in 2 years prior to the conflict and spiked an additional 60% when the conflict started. And so while the conflict sadly remains unresolved, wheat prices are on the verge of breaking down to the lowest level since the conflict started. So we are following the fall in commodities closely this week as the Fed will be seeing this and hopefully recognizing that inflation is starting to reverse down. And the market will most likely cheer if inflation continues to reverse downward, and commodities coming down is a huge first step in fighting inflation.
Yeah, and Bobby, that's why we, in our debate this morning, chose bear market rally ? There are those out there saying, well, the rally that we had last week, especially on Friday, was it because of the information you just shared and it's a one and done, or is it because inflation's actually starting to show some weakness here? And if the good news continues, despite maybe some interest rate increases, we could see this economy really firm up and start to move forward. Otherwise, there were those that were saying on Friday that the bears that were trying to knock the market down, shorting stocks, they had to cover those short positions, and it caused the market to rally. But your points were really well taken this morning in our discussion that we need to watch commodities closely as we're moving forward. And Ty, I know that our clients are all talking about as we approach the 4th of July weekend about gasoline prices. I will say this. We're all thrilled that our clients have listened to our blogs, especially the one like take a trip, please take a trip, take a vacation, give more money to the service industry. But even because that helps crack inflation also, But in addition to that, though, they're complaining about gasoline prices, just like we are here in our firm. Talk about some possibilities there, Todd.
Yeah, so talking about commodities, like Bobby mentioned, focusing on oil. In the news lately has been this federal gas tax holiday and kind of what that means. So there's been some supporters, obviously. Hey, lower gas prices, that's awesome. And then there's been some pushback as well. It's about 18 cents is that federal gas tax, and then that we ran some numbers, got with the research partners. They're talking about maybe like $30 a month for the average consumer. The people are saying that's not enough. People are saying it's going to increase demand, it's going to extend inflation, and those are all valid pushbacks. One pushback that we've seen that we don't find as valid is people saying that cut is just going to follow through to producers and the consumer's not going to see that. As you see in this chart, we've seen some states actually cut the oil gas tax for their respective states throughout the year, Maryland, Georgia, and Connecticut, and how that has resulted for the consumer and how it's gone through to them. So Maryland, 72% of their tax cut went to the consumer, 65% of Georgia's, 71% of Connecticut. So the consumer is seen as not just following through to the producers. And then as you can see in this other chart here, this is what the price is now compared to what it would be without the tax. Of course, an estimate there, but the consumer, it would be helpful to some degree, despite a couple of pushbacks. So it'll be interesting to see which way we go with that.
Any leadership, any legislation, those kind of things are going to have an impact on the overall situation that we're seeing in the economy, especially when it comes to gas and food prices, as well as some of the commodities that Bobby talked about. So folks, we're going in the 4th of July weekend. We want you to have a lot of plans, cook out with family and friends, take a trip, take a vacation, enjoy this. We're going to keep an eye on your portfolios as well as your financial blueprints, and we're going to keep you updated. We still are very optimistic as we continue moving forward in the year and watching cracks occur in inflation. We're going to keep you updated, and we thank you for your belief in us, knowing that every day at Five Plan Partners, we walk through our doors to help our clients have better, richer, fuller lives. Take care. Thank you so much.